If I traded it all, if I gave it.
So welcome back. I am so excited about having my next guest on. He's been on with me many times before. I have David Fisher. He's the CEO of Landmark Capital. And, you know, the market is nuts. You said the market is so nuts that you've been so busy. Welcome back to the show.
Thank you for having me on. As always, it's my pleasure to be with you.
Thank you so much. Talk to everybody about you, what you do, and what the heck is going on.
Okay, really quickly, what I do, I've been in the precious metal industry for 22 years. I used to have my own local radio program called The Market Close, and done a lot of local and national radio programs. In fact, been on 3 of them just this week on a national level. Been really busy since the last time I was on your program in December. I've done lots of seminars. Our company is accredited members with the Better Business Bureau, which is really important. So we have no unresolved complaints. We have no complaints, and our company is highly educational. There's no pressure working with our company. It's my style. I'm a big on education and helping people get their eyes opened. In my industry, there's something similar to the BBB that I am A+ rating with also. And so I have a lot of affiliates that endorse my company and a lot of local people like yourself and national talk show hosts too.
Oh, it's awesome. So, okay, what are we going to talk about today?
Well, take a deep breath with the markets today.
Yeah, scary.
Okay, if you remember, I've been on your program several times in the fall, and I said several times, get ready. We're going to have what I explained, and now we're having it. I'm not to toot my own horn, but there's certain things that, when certain things happen, there's certain ramifications for that. I mean, if you break the law and you go past a police officer and he puts his speed gun on you, you're going to get a ticket or you get pulled over. You know, if you intervene in a market, either a government or a central bank called the Federal Reserve intervenes in a market, once they pull back that intervention, the market either is going to stand on its own 2 feet or it's going to start to fall apart. This market cannot stand on its own 2 feet. And I'm not the only one saying it. It's turn on your television, go on Google, type some keywords in
I refresh
Google.
my CNN all day long.
And they're saying the same thing that I've been saying that's going to happen 4 months ago. 5 months ago. So now we're just in the beginning of this. If this is not going to stop in the beginning first quarter 2016, I'm going to make a prediction. It's going to go on for full 2016, and you think 2016 is going to be bad. 2017 is going to actually when really this comes into taking place, because what's happening right now is really simple. I know I'm making you frown. You sounded excited introducing me. Now,
I always
nobody
get
wants
excited,
to listen.
but I also
you get scared.
Spookus.
Yeah, because here's the reality. What you feel right now is nobody wants to hear bad news that their portfolio is going to go down. Nobody wanted to hear it in 2007. But the ones that paid attention and did something prior to 2007 and were highly engaged in their money and saying maybe there is some reality. Maybe the real estate market is overinflated. Maybe it was too easy to get a home.
A no-brainer.
Okay, so because it was market manipulation. They made, all you had to do is breathe in the mirror saying, I want a loan, and you got a loan, okay? Maybe the stock market is the exact same thing called quantitative easing. They injected way too much money. The Fed made it way too cheap. 6 years of artificially low rates. The rate of a 50-year period for the Fed, 20% on the high, which was March of 1980. Currently, a half a point, but it was a quarter of a point for almost 9 years. And the national average of the Fed fund rate is 5.93%. These are the numbers. These are not my numbers. These are the Fed numbers. You can go to the website and see it. So we've been in an artificially low environment for 9 years. So when you get back and take out that artificialness, the drug called quantitative easing, and you start reversing, not just taking away the drug, but you say, you know, we got to get rates back to normal. Let's try raising it a quarter of a point. And look what the market did. And I said, here's what would happen. Maybe not the first time that you'll see the market come down, but you're going to see signs of it unraveling. And you might not see gold move up the first day that they raise the rate, but you will start to see gold starting to make its way up. But by the second rate, you're going to see a big change in gold making a big move and stocks going down. Well, everything I just shared with you is now happening. The Dow is off since they started raising rates almost 9%. Gold is up almost 8%, and it's only been 2 months. Not even that. A month and a half.
Yeah.
Okay. So take me out of the equation because it might sound self-serving. I sell gold, and I get that. Jeff Gundlach, one of the top U.S. asset managers, came out today on CNBC, and he says, I don't like anything except for one thing, gold. He predicted
That's
gold.
all you have to say right now.
Yeah.
Just leave it at that. And, okay, I'm going to stop that for 1 second, okay? Because you have a process, and I want you to say that early because usually we get to that a little bit later. I want to just do that real quickly now because that's really important. Okay, yeah, we hear you. What do we do?
Well, let's look at what if you would have done what I'm saying. I'm saying the same thing I said on radio today that I said in 2007 before all the 2008 and 9 nonsense. Diversify your portfolio. Do not listen to a financial advisor or a stockbroker that says it's going to be okay. This is the time to buy more. Really? We'll explain that 4 months from now when your portfolio is 25% down, okay? Because that's where we're going. 4 to 6 months from now, the stock market drops 62% on an average, and most people lost 40 to 60% in 2008. I mean, you know what I'm talking about. These are real numbers. So if you knew the same thing was coming, just in a different thing that caused it, then prepare. And if you would have put 25% in stocks, 25% in cash, 25% in real estate, and 25% in precious metals, before all that, here's what would have happened. Less loss in stocks because you pulled some money off the table. You weren't 100% in stocks. You had some money in cash in case you needed to use it. Real estate went a 40% downturn, just like stocks did, some even bigger than that. But what did gold do? It went up 70% over that the first year and on a multi-year run because of that. And that's because they haven't fixed our debt structure. And the debt back then was about 12 trillion. Now the debt's almost 19 trillion. So the debt structure is going to cause gold to go up. The Fed is wanting to raise rates, but they're seeing now this whole idea of raising rates is not going to work because it's going to unravel the stock market.
But now you do free consultations with everyone, obviously. You have to. And there is this program that you have that basically, it sounds phenomenal because of the amount of money that it is compared to anybody else out there. Let's talk about that for 1 second there.
Yeah, and we'll talk about what causes people to do this. This is there's a government control coming down the pipe here. And since the last time I talked to you, Obama's putting something in place which will regulate retirements. He's revamping retirements this year. Okay, I said it was going to happen, and now the news is coming out. We've devised a method where, well, I'm not actually our company, but I work with a lawyer here in Phoenix that has figured out a way, and I've been using him for 6 years, and we've done thousands of these, where you can roll over your retirement and physically take possession of precious metals, gold and silver, hold them in your hand without a tax liability. Now, most companies have not figured this out yet, but the ones that have, which is about, I'm going to speculate, 15% of my industry, they charge somewhere around $995 to $1995 for their legal services, and we've outsourced it to this lawyer, and he charges $350 if you're in Arizona, and outside of Arizona, you're at $385. So the cost effectiveness, and I want to insert this, because I just had a gentleman that heard me on your radio program last fall. He came into our office just this week, and he's a retired veteran, and I made the commitment to any retired veteran that comes into our office and wants to learn how to do this. If they decide to do this, we're going to pay for that cost of setting up their retirement, which is the $350 in-state, $385 out-of-state. It's my way of not just saying thank you for your service, but a practical way of saying we believe in what you've done for our country, and I want to give back to you as a thank you.
That's wonderful. So his number is 602-287-9200. You can check him out at landmarkgold.com. We got a couple of minutes. I do want to also say that you have that white paper. Are we going to give that away?
Yes.
Okay, so we want everybody to get your white paper that you've written. It's all the information on there. It is the Coming Bail-In. It's coming.
It's coming.
The coming bail-in. How to avoid it from affecting you. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. Tell them what you want to say before the break.
Remember, if you don't take care of your money now, it might not be there to take care of you. So we're helping you be empowered to learn what's getting ready to happen to take care of your money now so that it will be there down the road to take care of you. And we have an interactive conversation called a financial blueprint. You wouldn't dare build your house without a map or a blueprint, and you shouldn't invest without a plan, and that's what we help people do. Make sure you have a tailor-made plan, portfolio for you, that you can go through these volatile markets and have peace of mind.
Well, if you're out there and you're ready to retire, yeah, you just said what you said about Obama and how he's going to
There's a new fiduciary rule that he's getting ready to implement this year. In fact, last year he said he's going to implement it at the beginning of this year. We are in the beginning. And there's a fight between who's going to manage your retirement. It's not a matter of if anymore. The government has already planned to manage your retirement, and it's either going to be the Department of Labor, and this is all on the internet. This is wide open. CNN's talked about it, everybody, or the Treasury. And when we come back from the break, I'll tell you a little bit more about it and how it coincides with what I've been talking about, the bail-in.
Let it go at that.
If I traded it all, if I gave
Welcome
it
back.
all.
And we are talking with David Fisher. He is the CEO of Landmark Capital. And, okay, I want to talk a little bit. Landmark Gold, Landmark Capital, it's all about gold. When we were at the break, you were just, you came out, you said something, and it was perfect for me because I'm the layman. I am the, that layman out there.
Yeah.
And let's talk about what you just did.
Well, you were asking me, well, I don't know how to use my gold, and I'm concerned about my stock portfolio, and, I don't, it's just the cost of living is going to cost more. And I pulled out of my pocket. I wish you had cameras in there that they could hear while they're driving or see while they're driving, but it doesn't work.
But we all know what a $20 bill looks like.
So I put a $20 bill before you and a $20 gold coin called the St. Gaudens coin, which was minted in 1907 and 1933. At the time, it was supposed to be the most beautiful coin ever minted, and they modeled the American Eagle after this coin. Okay. So I said, which one would you rather have? And your answer was?
The gold piece.
And I said, why is that? And you said?
Well, originally I said because it's pretty.
And I said, okay, well, how much do you think it's worth? And you said?
About twice as much.
So $40.
Or more.
Okay. Then I said, I'll give you the reality check. So the liquid value of this $20 gold coin, which is the same denomination as a $20 bill, is around $1,200. Okay? Now, why the difference? In the 1920s, a $20 bill or a $20 gold coin were the exact same value, and that purchasing power was I could have bought the suit that I'm wearing. Of course, I wasn't around then, but a man could buy a brand new suit and pay with either a $20 bill or a $20 gold coin. Today, if I want to take this $20 bill, I can't even buy the tie that I'm wearing. It's not expensive that much, but it won't buy even somewhat of a nice
Doesn't buy
tie.
tomatoes.
Okay, but if I liquidate this $20 gold coin, I'm going to have $1,300. I can buy this suit, take Marianne, my wife, out to dinner, and still have money left over. Take out a really nice dinner, okay? What's the moral of the story? Well, most of this value in this $20 bill has gone down the last 15 years, and most of the value of the $20 gold coin has gone up because 15 years ago, this $20 gold coin was worth only $300. Today it's $1,300. Next year it'll probably be $1,500, and in 10 to 15 more years it's going to be around $3,000+. While the $20 bill will probably be in half of its value of purchasing power. So you're not going to go to the grocery store with the gold coin. You're going to use it as a hedge against devaluation of currency, and a hedge against a volatile stock market, and a hedge against uncertainty, and a hedge against a bail-in, which is the fiduciary rule that President Obama's been talking about. I have a client who rolled over their retirement here in Wickenburg. I have lots of clients all around the country, but this particular one rolled over his and his wife's retirement, did what we're talking about. They got all our information. They got educated. I helped them understand it, and they made the choice. This is what we need to do, because they didn't trust the direction of our country financially, and they don't trust the leadership of government interfering in people's IRAs and retirements and bank accounts because of the Dodd-Frank Act that was passed under President Obama. So as a result of that, they rolled over their retirement. And a few months later, he did it in July, and a few months later, he calls me up and he says, hey, David, did you read the article about how the Obama administration is wanting to target retirements? I said, yeah, there's lots of articles on the internet about it. He goes, no, the one specific one that just came out in retirement living. I said, retirement living? He says, no, independent living. I said, oh, the largest retirement magazine out there. He says, yeah. I said, I haven't read it. Can you send me a copy? So he sent me a copy. I have it here in my hand. It says this: the fiduciary rule would potentially eliminate, this is on page 16 and 17 of the October issue, the fiduciary rule would potentially eliminate the smaller independent firms that lack the ability to comply with the new guidelines and rules. Millions of investors who are satisfied with their current brokers could be forced into find new government-approved brokers. So the government wants to create this. This is Obamacare.
It's Obamacare.
Financial, exactly. He didn't go through Congress to really get Obamacare around. He went around it. That's what fiduciary ruling is. Now, if you Google this in the internet, it's all over the internet. In fact, there was a bill that was introduced shortly after this article by Republicans trying to stop it from not being housed in the Department of Labor. The Department of Labor wants to manage our retirements. How crazy is that? Okay. I've been saying this is going to happen, and now it's coming out in mainstream news. But the actual bill that came out on November 12th by Republicans and saying, you know, we want it to be housed in the Treasury, which is exactly what President Obama has been saying for years and years and years. That's why he started this whole Myra retirement, where the retirement is housed at the Treasury. Why the Treasury? Because the Treasury supports the overspending of the government. And that's what this bail-in is about. This happened in 14 countries in the last 5 years. All 14 countries were upside down. They couldn't pay their debt, so they went internal to their citizens' bank and retirement accounts, seized the assets, gave them a government note, say, we'll pay you back over time, and 50% of those countries defaulted on those notes within the first year. The other 50 are still paying back their citizens, and that's what this is. This is a bail-in. And so if you think that our $19 trillion is unmanageable, and you think the volatility of the stock market does not make you feel comfortable, and you think that intervention of government in your financial private life is causing problems, just like he wants to come in. I want to get on my soapbox here on gun control. I believe we should have some sort of criteria so that people don't get shot, innocent people. I'm for certain things, but what I'm not for is making guns illegal. What I'm not for is using that as an example is the government seizing your retirement and you're managing your portfolio. They think, and they came and said this through the Consumer Financial Protection Bureau, the week after it was put in place by President Obama, they went before Congress, Richard Cordray said, I want to see the legality of, because we think the government can manage retirement accounts better than Americans. And so that's what this would do, is to pay down the debt. So that's why we devised this plan, and lots of people are rolling over their retirement, getting physical possession of their precious metals, getting properly diversified so that these events that are happening right now is not causing turmoil with them financially. They have peace of mind, and if the government wants to come in and do what the Wall Street Journal said they would do in 2013, they wrote an article about it called the Coming Global Wealth Tax, which is the bail-in, that the government wants to take 56 to 71% of retirements. So imagine for a second, you do this ahead of time, just like you did this ahead of time in 2007 before the 2008. And if we have a 2008 all over, you're going to have a peace of mind. You won't have a 40% loss in stocks. You'll have a 70% gain. This is what happened before in metals. If they do a seizure of assets, you won't have a 56 to 71% seizure of assets. You'll have 100% safety. And this is why people are waking up, because they fear the future. It does not look so bright.
I'm telling you, it's true. I mean, you really make it sound very clear for everybody. You're all about educating them. We have our lines open here, and I'm going to let you call throughout the rest of the show for it. It is his white paper on the coming bail-in, how to avoid it from affecting you. Our number here is 602-277-5369, and toll-free it's 1-866-536-1100. You can reach him at 602-287-9200 or landmarkgold.com. Final words.
All storms, hurricanes, and major challenges, whether it be financially or a hurricane coming and destroying your house, Wise people prepare. Noah built an ark before it even started raining. People that see some of the warning signs, what the media is trying to do is tell you ignore them. This is the buying opportunity. Yeah, they might be right in certain sectors, but then why is all 10 sectors of the market down yesterday and today?
It's been down for longer.
Yeah. We've had the biggest downturn in the market the first week of this year since the beginning of the Dow. There is warning signs of a financial heart attack coming. So prepare, get your finances in order. And you know what? This could possibly be one of the best investments because where we're at right now, Carol, in gold and silver is where we're at in 2001. We're getting ready for the next major leg up, and the debt's going to drive this. Inflation's going to drive this. And get prepared, get protected. Call my company, 602-287-9200, free consultation, and we'll help you get started if that's what you want.
Or call here at 602-277-5369, and I'll get you connected with him, too, and get the white paper.